In this video, we'll be doing the adjustments in the chapter NPO. The adjustments in NPO are of different types. There will be adjustments with two effects, the kind of adjustments we've been doing since we've learned the chapter Final Accounts of a Trading Concern. There'll be adjustments with formula, we'll be learning the formula. There'll be adjustments which will have only a single effect. There would be informative adjustments as well. So let's begin with the adjustments in the chapter NPO. As we will be learning the adjustments here, we will be studying them in comparison with the effects which we have given in the chapter Final Accounts of a Trading Concern. So the first adjustment, outstanding expenses. Outstanding expenses, we know. Outstanding, we always add. So the first effect, we add to the expenditure. Outstanding expense, we add to the expenditure. In partnership final accounts, we add it to the expenditure either in trading account or in profit and loss account to the debit side. However, in the chapter NPO, we do not prepare a profit and loss account, but we prepare an account which is similar to profit and loss account. Yes, that's the income and expenditure account to the debit side. So outstanding expenses add to expenditure to the debit side of income and expenditure account. And the second effect, we add to the liabilities. This effect remains the same. The next adjustment, prepaid expenses. Prepaid, we minus. So the first effect, we minus from the expenses, less from expenditure. In partnership final accounts, we minus from expenses either to the debit side of trading account or profit and loss account. However, here we will minus from the expenditure in the income and expenditure account on the debit side. The next effect for this will be the same, we write it to the assets. So the two effects, less from expenditure and to the asset side. Adjustment number 3, outstanding income. Again, outstanding we add. Now we add to the income. So first effect, add to income. Where in final accounts of trading concern, we added to the profit and loss account credit side. Here we will add it to the income on the credit side of income and expenditure account. That's the difference. Second effect, yes, we write it to the asset side. Then the next adjustment is for pre-received income. Pre-received income, income received in advance. So advance we minus from the income. The first effect, less from income. What did we do in trading concern final accounts? We less it from income on the credit side of profit and loss account. Now we will minus it from income on the credit side of income and expenditure account. And the second effect, we write it to the liabilities. The next adjustment is with depreciation. Depreciation, first effect, we less from the fixed asset. And the second effect, we write it to the debit side of profit and loss account. However, over here in NPO, we write the second effect to the debit side of income and expenditure account. The next adjustment, now these are the adjustments which we have studied, which we have been studying since the 11th standard. There will be a little change now from adjustment number 6 onwards, which is for calculation of stationery consumed, sports material consumed, and medicines consumed. Alright, let's study this adjustment in detail. So, as I've told you earlier, the amount of expenses which we write in the outer column, suppose this is your income and expenditure account, so the amount which will be written in the outer column is the total amount of stationery or sports material or medicines which have been consumed during the year, which have been used during the year. Now, how will we know what is the total amount of stationery or sports material or medicines which have been consumed? Now, how do we calculate? First, we try to find out what we have throughout the year. What is the amount of stationery or sports material or medicines that we had with us? So, how do I know that? We check the opening balance. So, the opening balance of stationery. Let's take stationery for our example here. How do I know stationery consumed? I had some opening balance of stationery. Opening balance of stationery from the previous year, whatever stationery was balanced, that becomes the opening stock of stationery. Plus, during the year, some more amount of stationery was purchased also. So, the opening stock of stationery plus some additional stationery which was purchased during the year. Then I get the total amount of stationery which I had during the year. This is the total amount of stationery which I had during the year. Now out of this, there is some balanced stationery. At the end of the year, there is some stationery which is balanced. That is the closing stock of stationery. So we have the closing stock of stationery over here. The total amount of stationery which we had. From there, this is the amount which is balanced. So that gives us the amount of stationery which was consumed during the year, and that is the amount which we will write in the outer column. So that's how we derive the formula. The opening stock plus the purchases, any new additions made to the stationery will give us the total amount of stationery that we had with us. From there we minus the closing stock of stationery. And we know the total amount of stationery which we have. So the formula opening stock plus purchases minus closing stock will give us stationery consumed, sports material consumed, or medicines consumed during the year. The next adjustment will be with regards to capitalization. Now capitalization means we add to the capital. To capitalize means add to the capital. Alright. So, suppose in the adjustment they say capitalize entrance fees and donations. Now, otherwise entrance fees and donations, they are income, right? I am the NPO, I will receive entrance fees, I will receive donations. Otherwise, it's an income. So, incomes we would write to the income side. However, in the adjustment they have said capitalize entrance fees and donations. So, to capitalize I said you add to the capital. So what do? We have capital fund to the liability side, the amount of capital fund. We add entrance fees, we add donations to the amount of capital fund. So capital fund, add entrance fees, add donations. This is how we give an effect for capitalization of any incomes as required in the question. The next adjustment, number 8. Very important adjustment, and this is where students usually get confused. However, if our concept is clear that when we prepare income and expenditure account, all the amounts which we write in the outer column are only pertaining to the current year, then it would not be difficult. So the adjustment outstanding and advance income, in our example we will take subscription and expenditure. We will take salaries as our example. So outstanding subscription, advance subscription, outstanding salary, advance salary. Let's see what is it about the adjustment. So over here we have subscriptions and salaries. It could be for either, and this adjustment could be asked either for an income like subscription, or it could be asked for salaries, that is an expenditure. So as I told you, the amount which is written in the outer column is the amount of expense, is the amount of income only for the current year. Only for the current year. Which means any expense, any income given for the previous year, we minus. Any expense, any income given for the next year, we again minus that. Let's see the adjustment in detail. So, we begin the adjustment, subscriptions and salaries. This is the amount that may have been received during the year for subscriptions and salaries. I am saying during the year. This is the total amount received. Now, in that, something has been added. What is it that is added? Outstanding for the current year. In that, what is added? That which was for the current year. It is pertaining to the current year, hence it has been added. Alright? Then, there is something that is deducted, something that we have less. What is it that we have less? That which was outstanding for the previous year. It was for the previous year, and that is the reason why it has been deducted. So again, let's read it. Something is deducted. What is deducted? That which was outstanding for the previous year, but it was received in the current year. It was outstanding for the previous year, means it is pertaining to the previous year, but we had received it in the current year. It is not pertaining to the current year, it is pertaining to the previous year itself, and that is the reason why we minus it. Since we are going to minus, that is the reason why I have put the amount in bracket. Then further, there is something that is added in subscription again. What is it that is added? That which was received in advance during the previous year. Now, in the previous year, it was received in advance. If it was received in advance in the previous year, then for which year it must have been received? Yes, it was received for the current year. So what is added? That which was received in advance during the previous year, but it was for the current year. So it is for the current year, pertaining to the current year, and that is the reason why the amount has been added. There is something else that is deducted again. What is it that is deducted? That we have less advance during the current year. So this is the advance which was received during the current year. Now in the current year, if I am receiving in advance, current year I receive in advance. For which year? For the next year, correct. If I am receiving an advance today, then it will be an advance for the next year. So it is pertaining to the next year. I have received in the current year, yes, but it is pertaining to the next year. It is not pertaining to the current year, and that is why again we minus the amount. Since we minus, that is the reason why we put it in brackets. So as I told you, all that is for the current year we add. Over here we can see outstanding for the current year, advance during the previous year for the current year. So again add. All that is not for the current year, that we less. Example, here, outstanding for the previous year, received during the current year. It was outstanding for the previous year. Again, something that is less, advance during the current year for the next year, the amount for the next year. So everything for the current year we add, everything for the previous year or next year we minus. And that is how we derive at the total amount of expenditure, total amount of subscription or salary for the current year. Alright, so that's about the adjustment on outstanding and advance incomes and expenditures. The next adjustment is on donations. Now this will be more of an informative adjustment, where in donations there are two types of donations. We will have general donations and specific donations. General donations, which are recurring in nature, mostly of revenue nature. They are recurring, so they are revenue. And since they are revenue, so revenue income, we always write it to the income and expenditure account, to the credit side. Specific donations, they will be received for a specific purpose. So they are treated as capital incomes. They are of capital nature. So it is written to the liability. So donations, it will be mentioned in the question. Donations general or donations specific. So if it's general donations, we write to the income and expenditure account. We have received, so we write it to the credit side on the income side. Specific donations for a specific purpose, so we write to the liabilities side. Adjustment number 10 is on opening balances of assets and liabilities. At times in the adjustments, we would be given the opening balances of assets and liabilities. With the help of these opening balances, we would prepare the opening balance sheet. Why would we prepare the opening balance sheet? To calculate the capital fund amount, as it may not be given to us in the question at all times. Suppose capital fund is given to us in the question. Then in such case, these opening balances of assets and liabilities, we would use them to give effects to various adjustments like outstanding expenses, outstanding incomes, prepaid expenses, pre-received incomes, etc. Or at times, these balances would be simply used to record them as fixed assets, investments, capital fund, etc. in the balance sheet of our solution. These adjustments, however, will be well understood by us all once we apply them when we solve our questions from the chapter NPO. So it's time to get started. After this video, we will be viewing videos on the solution of questions in the chapter NPO. Hope the video of adjustments was useful for you. Thank you.